Hi, my name is Jason Jessup and I'm the CEO of Magna Mining. Magna is a Sudbury-focused copper, nickel, PGM mining exploration development company.
Good to see you, sir.
Yeah, it's great to be back again.
Yeah, I know. It's good. How's the conference going so far? Like day two, nearly end of day two. Are you getting the meetings you want?
Yeah, like we've had a number of retail meetings. I think it's heavily weighted on the retail side as opposed to the institutional side, but It's been so far so good.
But you had a stellar year last year, right? You kind of got a few big
We
names.
did all right.
Got a bit of money in. Bought a bunch of stuff. So institutionally, can you kind of remind me what the share register looks like actually?
Yeah, so we're over 50% institutional.
Yeah.
But we also have a pretty heavy weighting of management board, still around 10%. Our largest shareholder is Dundee Corp with about 21%, and Jonathan Goodman runs Dundee, and he sits on our board. But yeah, we brought in a number of really great institutional investors over the last 18 months.
Right, and they want to see production, and you've done it. They saw the quarterlies. Obviously, 1 month out of the quarter. To be fair, I mean, can you give us the headline numbers so we can get into a conversation?
Yeah, so we closed the acquisition on February 28th of 2025. So we started running the mine and producing at the McCreedy West mine March 1st. So in that month, we produced 790,000 pounds of copper equivalent. So roughly 20,000 tons at about 3% copper equivalent grade. And produced a little bit of cash margin at the mine, so about $300,000, which for the first month I was really pleased. I did not expect us to be, in any way producing cash flow from that month at the mine. But it was a month of transition, so we were able to come in. We had to refocus the crews there. There was no broken ore on the ground or on the ore pad, so we had some work to do. So it was really a 3-week month. In all intents and purposes, really got started around the 7th of March, but I was really pleased with it. It was a great month. We worked very safely, and I was really happy to report it. And we ended the quarter with about $38 million Canadian in the bank,
including the raise.
Including the raise, mostly from the raise.
I was about to say.
Yeah.
What a 3 weeks, right?
Yeah.
So let's talk about the raise, because you kind of different types of structures in there. If you can break that down for us, so I understand why.
Yeah, so we closed in early March $33.5 million with $23.5 in a convertible debenture.
Yeah.
And $10 million of equity.
Unsecured, wasn't it? Yeah. Okay. What have you done with that? What's the use of proceeds? Obviously, McCreedy West is up and producing, and I want to understand if that 3 weeks or that month was representative of what you see going forward. And what I'm trying to get at is, how do I kind of understand what the potential is for the rest of this year? So
a lot of that cash is just for working capital. So a good chunk of it. And because from the time we deliver ore, from the end of 1 month, it's delivered ore, we sell it to Vale or Glencore. There's a period of months until we actually get paid for that. So there's this working capital deficit we got to cover. And then, the money starts coming in. And so part of it's for that. Part of it is going to be for investment directly into McCreedy West. So we haven't put out official numbers, but we're going to spend, between $5 and $10 million this year investing into capital development to open up more workplaces, give us more flexibility in our plan. And ultimately, we believe, to ramp up production.
Yeah.
And so that's really important, to having sustainable production at the mine. We're also going to buy a couple pieces of equipment this year just to replace some of the aging equipment at the mine. And again, just to have reliable, cost-effective maintenance on equipment. So that's really important. And this year is not about, trying to come out of the gate and mine as much ore as we can. It really isn't. And then when I'm at the mine, the first thing I always ask is, how is development going? What's our development looking like this month?
Yeah.
That's going to be critical to what our success in 2026.
Development of McCreedy West, or because you're for the development place sitting behind this as well?
Yeah, so like actual drift development, sustaining capital development underground at the mine. So right now we have 1 crew running 4 shifts on development, aside from our production team at the mine. We're also this month have brought in a contractor to do a 6-month contract work to do additional underground development. And that's going to give us access to more workplaces, put the development out farther in front of the production so that we can have more time to properly drill off and define stopes. all this is going to improve production going forward, but it's necessary. It was a non-core asset to the previous owner, and a lot of this investment wasn't done in a timely fashion. So the mine was pretty hand to mouth, and I've operated this mine when it was very productive, and we were mining over 2,500 tons a day. I think in 2008 we mined about 720,000 tons of ore, and right now it's probably closer to 300,000. So there's lots of opportunity to make improvements.
Right. So I mean, part of what you're doing is got to be about the money, because why not just focus on development and stuff otherwise? So it's like saying, let's make sure the systems work, the processes that we put in place, the people that we've hired get used to the mining component here, and then the development stuff is going alongside of that. But so with the kind of mining bit, is that 1 month indicative of the sort of the scale of the operation going forward with that portion, or can that bit improve?
I would say that 1 month is not indicative of what we're going to do going forward.
Okay.
It's the first month where, again, I would have expected, going into it in February, that we're probably not going to, we're going to spend a lot more money at the mine than what we're going to produce. We did a little better than I expected, and we basically a little better than break even. But what we want to do going forward is obviously ramp up production. Like say, historically, about 900 tons a day is what had the previous owner been doing over the last couple of years. We have the team now. We've hired some more people. We've added in a fourth shift, so they were running on 3-shift schedule, which had a couple shifts a week without any people working underground. We've added in some people, went to 4 shifts to get more time underground, more working time in the faces. And with that, I think we're going to see some improvements. But again, this year, it's easy to get caught up in we want to produce as much cash flow in the short term as possible. And I think that is where a lot of companies go wrong. In my experience, you have to put out the development and the diamond drilling front. So I guess in some regards, you could look, we're still at a development stage. If you think of a development mine that is, ramping up production and still developing, that's probably what this year is going to be more reflective of than a first year of commercial production, let's say.
So let's not look at you as a producer, although it usually helps with multiples and interest from the institutional boys and girls to say we're oiling the wheels, we're preparing ourselves to move at scale. So this is the kind of starter version of
I would say
Magna
absolutely
Mining.
of the first mine.
Yeah, the first one. Yeah.
And the great thing about what we're doing, and again, people try to say, well, what do you think the free cash flow will be next year, and what would be that on a multiple of that cash flow?
Yeah.
You can't really value us just on McCreedy West, because that's only one piece of the story.
I'm trying to value McCreedy West right now is what I'm trying to do. But and obviously we'll come on to the development place in a second. Say how much development work needs to happen. Is it ongoing? And how much of your OpEx is kind of focused on McCreedy West? Yeah,
there's always going to be sustaining capital in any mine, and so. I think by the end of this year, by Q4, we'll be in a position where we have development running very efficiently, at a sort of above market average development rates, and that then will sustain this production we think is optimal production, whatever we determine that's going to be over the next coming months. But then at that point, I think we're going to be a very steady state, cash flow positive. That's forward looking, but I believe it will be long-term sustainable cash flow positive mine. What the great thing about it is what that does is provides us with cash that we can reinvest to restart the Levack mine, which is on care and maintenance and right next door, and has lots of synergies with McCreedy West, and was in the past, when it was owned by FNX Mining, the flagship asset that produced a lot of cash flow, and then cash flow from both those mines to reinvest into Crane Hill. So what it is this year will be the year that we'll set ourselves up to be a bootstrap model. And I think there's really a strong case that's the right way to move forward. Now, some of our investors ask us, what would you do if you had more money right now, and could you build Levack and Crane Hill at the same time as you're ramping up? And how fast can you do this? Because they start looking at DCF models and how quickly can you get to scale? So it is something that's possible, and if we had the right cost of capital, we could raise some more money and ramp things up quicker and not be reliant just on a bootstrapped cash flow model. But we don't have to.
Which is the point. You're in control.
That's right.
You're in control, because the cost of that capital, and obviously whatever the price of copper, etc., is doing for you at that moment in time, it affects the margins significantly. So moving at a pace which is going to suit you, but you've still got to ask that question of scale, right? People are going to say, right, okay, you got good grades and you've got production. You show you can mine. There's a route to market for you guys. But these follow-on projects, I think the big question is always going to be about, well, is the money from McCreedy West going to be plowed back into Levac? Is it going to be plowed into Shakespeare? Is it going to, does the money get plowed back into the ground? How do you ensure margin, profitability, and success financially?
Yeah, and so how do we,
Make money.
ensure we have success and make money? It really comes down to, quality. It comes down to doing things right and grade. That's how you make money in mining. It really comes down to grade. So, we are building a team, and, we largely have that team, but building the team, the processes, and the culture that we believe is going to, make success for us. And that's going to take the rest of this year to get development in place to make sure things are running really smoothly.
Yeah.
Then investing that money that we will be making into, we believe it'll be Levac mine. And right now we are, performing an internal study to look at the options and, the economics of a restart of Levac mine. I think we'll have that completed sometime around Q4.
Yeah.
And, probably by the end of Q3, we're going to have a new resource come out on Levac. We have drills turning there right now. So all of that together, what we're seeing is pretty exciting. Yeah. To remind yourself and some of the listeners, we released some drill holes from Levac in the last couple months since we've taken over. And, we have some very high grade copper. We're getting a couple meters at 24% copper plus some PGMs close to surface, within 200 meters of surface. So, this is what we call the keel zone. This high-grade footwall zone is something we want to incorporate into this restart plan. Never been mined before. Pretty exciting. So, we're very optimistic about Levac mine. And because it is a mine that operated in 2019, has an active shaft, there's people going underground and doing maintenance every day on it. It's used as secondary egress for the McCreedy West mine as well as Glencore's Onaping Depths project. We think it can be a very low capital cost restart. So, potentially the cash flow in 2026 from McCreedy West could be enough to start that restart plan, and then possibly by 2027 be into some form of commercial production.
Okay. So the starter project is to demean it, and so it's meaningful cash, right? But Levac could be the cash machine for you. You'll tell us when the report comes out, and what do we say, Q3?
We'll probably put out our resource,
Yeah.
our NA41 resource on Levac by the end of Q3, and it'll probably be sometime in Q4 we'll come out with our study, and that's where we'll be able to start, making that decision and looking at what the actual costs will be, and then communicating that with the market.
Okay. So you've got to believe on the basis of what the market knows today is going to be better than that. So there's the economics. Your expectation is the economics are there, and that's what to focus on. Otherwise, looking around the market at the moment, there's a lot of cash-stranded companies struggling, but you obviously think they don't have what you've got.
No one has what we got. Like, we have a producing mine in the best jurisdiction, I would say, in North America for copper and nickel mining, and 4 other fully permitted past producing mines.
Right.
With a combined NI41 resource of over 50 million tons of very good grade, copper, nickel, PGM ores. So we have a lot, and we've done it before. So yeah, no one else has what we have.
Okay. Staffing up for this, obviously you've ramped up significantly in the last year. What more? How many more people are you going to take on, and where are they going to come from?
Yeah, so at this time, I think we're in pretty good shape. There might be a few other vacancies to fill, but we have a full crew at McCreedy West. So for now, that's done. But when we do ramp up with at Levac mine, we're in a city of 180,000 people that has a long mining history. So there's lots of people. There's a number of people that are working in camp jobs that would like nothing better than to come work for an exciting growing junior and be home every night
with money.
So with money, making money.
Yeah.
So, we're not too concerned with ramping up. We've had a lot of interest from a lot of different, technical people, as well as, miners and other support staff that would love to come work for us when the time's right. So we're not too concerned about that.
Okay. Now talk about the market. I sort of joked there about, in terms of what's out there, and it's pretty light on the ground. Good copper projects, pretty light on the ground out there at the moment. But what does that say about the kind of supply response for copper? There's your views on the macro, and I know you haven't got a crystal ball. I'm not asking you to have a view on that one, but when you're sort of talking to institutional, when you're sort of looking around the kind of majors out there, I mean, is there going to be enough copper for us?
Yeah, so that's a great question. I think that the fundamentals for copper are extremely strong. That being said, there are some good copper projects out there, and by good, multi-decade, but they're very large capital costs, multi-billion-dollar capital costs. Yeah. And the challenge, I think, for majors, mid-tiers, and even juniors, of course, is that capital that needs to be invested in the timeline to get these mines built and into production. So when we talk to institutional investors and they're looking for how do we take advantage of, any upswing in the copper price and get exposure to copper sooner without having the risks of, multi-year, multi-billion-dollar builds, delays, cost overruns, change in political climate. I think that's where our projects stand out. We are not the biggest copper projects out there compared to large open pit porphyries, but we are de-risked. We have proven track record of production, multi-decade operating mines, and potentially for some really high grades.
But is that attractive to the market? Because is big beautiful, or is profitable beautiful?
Well, I guess depends who you ask. From our perspective, profit's really what matters, right? And if you want to take an ultra low grade play on something that, with the right price environment has tons of torque to any specific commodity, that's a different style of investor. Someone who says this is something that can make money, reinvest that, not dilute shareholders, and continue to grow. I think there's a lot of shareholders that are attracted to that.
Right. Okay. What was the response to that capital raise in the market? Do you think people were they expecting? Had you signaled that in terms of the sustaining capital?
Yeah, I think the response was good. We really heard nothing negative about it.
Right.
I wouldn't say that we were signaling and telling the market. It's never usually a good idea to tell people, yeah, we're going to have a raise next month.
Yeah.
And honestly, it came about there was an opportunity that was presented to us with some investors that wanted to get involved, and it was a creative structure with a convertible debenture.
Yeah, well, I guess better than straight equity in a way, but why convert?
Well, a couple things. One was it was much simpler. It's an unsecured convert, so to get a deal done fairly quickly without a lot of security and all the legal that goes with that, it was something we could get closed relatively quickly. Dundee Corp, subscribed to a large portion of it. And they're an existing shareholder, so we know it's in good hands, along with a few other sort of selected investors. So it was, there was a lot of things appealing to it, and the terms were, we thought, very competitive.
Who got the favorable terms? You or them?
Pardon?
Who got the most favorable terms?
I think it was a great terms for both parties. We even had some of our executives participate, and some of our board members participate in the convert. It was good, but it was great for us.
At the right time.
Right time, and I think at a very good prices.
Do you feel like, the timing is always important, right? Obviously, again, I just think some companies time things beautifully, and others with great projects just don't quite get it right. You feel this re-interest in copper coming through in Canadian projects coming back. So it kind of feels like retail guys aren't there at the moment, but maybe the interest is.
Yeah, there's definitely interest. I think there's been quite a few retail investors that have, been blinded by gold, and gold's had a great run, and I don't blame them. And we see some money moving in that direction, and that's great. But copper is solid, and a lot of people are interested in copper, and I've been doing a lot of marketing, going to a lot of conferences and sitting on copper panels, and there is tons of interest in copper, so I think we're in a really good space.
I agree. I hope you're right.
All right.
Okay, thanks very much for making the time to see us. I know it's the end of the day now. To much relief for both of us, I suggest.
Yeah, it's been a long one.
One more to go. One more to go. And we'll
Absolutely.
see you soon, okay?
Thanks.